Everyone, Paul here. Today I'm going to be going over a strategy, and it's pretty powerful. You see my last video, I talked about these two indicators to where it can help you find more profitable trades. It's meant for, this strategy is meant for Forex and doing it at 100x basically. But I want to show you the same strategy, and we're going to look at it towards the stock market, and we're going to be looking at SPY. So first I'm going to go over just doing it on SPY, which is basically doing it on Robinhood or Webull. I might go over how to do this for Forex. But basically the main difference here is on Forex you can hold longer trades. So I want to show you how to do this strategy on doing it with looking at SPY, the S&P, and focusing on Robinhood or Webull. Now with this strategy you have two indicators and you want to focus on the long-term basis, so we will be only looking at the hour chart for this method, because I believe if you focus on the hour, you'll make more you'll make better results from it. So I'm going to show you how to set it up and how to profit from just looking at with these two indicators. We're going to be using the L&L trend system and the strength index, the trend strength index. Okay, so to set this up, you basically need two indicators. We're going to be looking at the S&P on the hour, and basically what I have here is I have the L&L trend system. Now, I've made videos on it, so I won't go too much into it. Basically, go to your indicators, and you want to punch in L&L trend system. And once you have that loaded, you want to only put, it's going to have a bunch of bells and whistles and other stuff on here when you first load it up. But you basically check everything off except for show trend line. And you want to make sure your colors are bright. So bright green, bright red, neutral color, I choose white. And then you want to have show HTF trend line. And you want to make sure these are bright colors. So everything else you check off. Anything else is just a distraction. I also have the 200 moving average here. That's the yellow line. And then I also have so it's the trend strength index. And once you have that loaded, basically you want to change your length to 10. And then you want to bring out your opacity on the bullish and bearish colors. So that's basically how you set it up. Now, what we're going to be doing is we're going to be looking at the S&P on the hour, and what we basically want to figure out, the first thing we want to look for is the cross. So the two lines from the L&L trend system, we want to make sure cross. So that we're looking at the cross because that is the direction that you will focus on no matter what. So the last cross point on the hour is the direction that you're going to be focusing on. So what you want to be looking for is a cross on the hour. So what we see here is, we see that the last time they crossed was right here, and it was on February 21st. So that was the start of the downtrend with the S&P. So when these do cross again, you'll be focusing on the uptrend. You won't be focusing on downtrend. But since these have not crossed yet, and this cross point right here, we are still in a downtrend. So now that we know the downtrend, now if it was right here where it just crossed, we would be, you could enter this trade if you want, but what we see right here is when it crosses right here, if we look at the trend strength index, we're kind of too late on the signal, because if you look at the trend strength right there, it's kind of in the middle right here. So it's kind of too late to get into it. What I would wait for, it to retrace, come back up a little bit, and come back down. So what we'd be looking for, right here, since we know the direction is now down, we want to look for the trend strength index to come up, and then we want to look for it to come back down. So since we want to focus on the direction going down, so we have to wait all this out. You could have entered this trade here if you wanted to, but if you missed it or anything, you have to wait for the next cycle. So you want to wait for it to come back up a little bit and then to cross back down with the trend strength index. So this would be the official next time to enter the trade. It's on the downtrend and it's below the zero line right about here. So this is when you would enter your trade. So if we measure this real quick, if we measure it from here, so right about here, this is when we would enter our trade and we would stay in it. Now you can use RSI and it can help you determine when to get out of the trade, but basically as long as it's below here, you'll be making some profit. So if I did a put right here, it would have lasted for 2 days and it would have made about $1,145. So that is your first trade. So since we are still in a downtrend, that's what we keep focusing on. We need to wait for it to come back up with the trend strength index right here, and then for it to come back down, which is right here. So this is our next entry point. So right here would be our next entry point. Our next put will be right here. So we would enter this one, and from here to here, and this is about $1,478. So then we got our next entry point. We wait for it to come up through the zero line on the trend strength index right here, and we wait for it to cross back down again, which is right here. And we would enter right about here. This is where we would enter. We would want to enter a in the money trade. So basically you would enter here, ride this out, and this would be another $1,234. So that's the direction of it going down. Let's go back a little bit and look at some previous times. Let's look at an uptrend. Now, right here, it's not exactly crossing right there. It starts really right here. So this was the start of an uptrend, a brief one. So we kind of missed this one. You could have got in here, but it would have been brief. So the next thing you want to do in this situation is you want to wait, since the direction's going up, you want to do the opposite of what we did before, and you want to wait for it to go down below the zero line, and you want to wait for it to come back up. We want to be focusing on uptrends here. This would have been a small one, but let's see how much, if you would have made any kind, if you entered right here and exit right about here, not much. This one like $200 there. So then you see that it comes down again, and then you want to wait for it to come back up, which would be right here. You would enter right here, and this would be your next trade if you rode this up. Right, yeah, you rode about here. This would be about $600. It goes back down again, and then we want to come back in when it comes back up through the zero line, which is right here. And you ride that out. This is about $288. So that's an example of finding it on the downtrend and finding it on the uptrend. You want to first look at your L&L trend system, and you want to find a moment that the lines cross. Once the lines cross, you know the direction that it's going. And once you do that, you want to refer to your trend strength index, and you want to wait for it to pull back in the opposite direction and then come back in the proper direction that it's going. So you always go towards the trend. So basically, that's how you would do this for the S&P 500. This works for the hour. I wouldn't do this for shorter time frames. But let's just say that if you did this for even a longer period, let's just say a day real quick. And now, if you do it on the day, it's not going to cross as much. The L&L trend system is not going to cross as much. But it'd be the same thing if you want to ride it out for longer periods of time. Now, you want to do the same thing if you want to focus on the day or any other time frame. You want to focus on when it crosses. See right here for the day, we see it cross right here. So you got all these moments to focus on for really long trades. It works the same way. The trend starts going up right here on August 14th. So you would focus on every moment where the trend strength crosses up. So this would be a trade. This would last for right here. From here to here, this would have been a trade. 16 days. Now you would have had to buy your contracts for 16 days. So this would have resulted in about $2,600 in 16 days. And then you wait for it to come down. You wait for it to come down below the zero line because this is going against the trend. And then it comes back up through it again. And this is when you would enter again. So you would enter right here. And you would ride this out. And this would be $2,000 in 14 days. And then it comes back down, and then it comes back up right here. And you would write it out here. You would have, this would be a trade 2. You would have made about 1,300 right there. And then you get all these moments. You got a moment right here. You got a moment right here. Goes down a little bit. Then you got a moment right here, and you got a moment right here. So there's many times. The longer you go in the time frame, the better your results are going to be. The more you can potentially make. I personally wouldn't do this on the smaller time frames. Depends on what time frame you want to use. The longer you go out in time frames, the longer you're going to have to wait for the L and L trend system to cross. So once it has crossed, you just basically focus on that direction. Like right now, it has crossed down. So we would be waiting. We'd be waiting for pullbacks to come back up through the zero line and then crosses back down. So that's basically, you could do it on whichever time frame you want. You know, I personally find the best by doing this on the hour. I wouldn't be doing this on any other smaller time frame, but this strategy works very well. So you could use the strategy for whatever time frame you want, but it's best to do it on a longer time frame because you kind of get, you see the bigger picture on a longer time frame. It won't work as well on a smaller time frame because you get more sideways and more volatility. But definitely I would recommend doing this on the hour. And you know, you could do it on even longer, like, but doing it on Robinhood, you have contracts and they expire, so the hour seems to be the best time period because you can stretch it out for a day or two and still make some pretty good profit. But anyway, if you guys like the strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.